When people think about investing, they often imagine stock prices jumping up and down. But there's another quieter way to build wealth, a way that doesn't depend on timing the market or guessing what will rise next week. It's the power of dividends. Money that companies pay directly to you, simply for owning their stock. Today, I'm going to walk you through what dividends really are, why they matter, and how they can become one of the most dependable sources of long-term wealth, not through luck, but through steady, predictable, growing income that compounds over time. A dividend is a portion of a company's profit that it pays out to its shareholders. Think of it as a thank you for investing in the business. Not every company pays dividends, but the ones that do, usually mature, stable companies, use dividends to share their success with investors. If you own a dividend-paying stock, you might receive cash every quarter. It could be a few dollars or thousands, depending on how much you invest. And the beautiful part? You don't have to sell anything to receive it. It's passive income, pure and simple. Dividends come in a few different forms, and understanding them gives you more control as an investor. Cash dividends, the most common, actual money deposited into your account. Stock dividends, instead of cash, you receive additional shares. Special dividends, one-time payouts when a company earns unusually high profits. Dividend ETFs, collections of dividend-paying companies bundled together, spreading out risk. Each type rewards you differently, but they all share the same idea. Ownership leads to income. And the beautiful part? You don't have to sell anything to receive it. It's passive income, pure and simple. Dividends matter for one reason. They create real, tangible returns, even when markets go sideways. Over the last century, dividends have contributed a major portion of the stock market's total growth. They provide stability when prices fall, momentum when prices rise, and predictable income in every season. And if you reinvest those dividends, buying even more shares, your wealth starts compounding automatically. More shares create more dividends, which buy more shares, which create more dividends. It's a self-feeding cycle, a financial engine, a quiet snowball that never stops rolling. Every dividend-paying stock has something called a dividend yield. It tells you how much income you earn relative to the stock's price. If a $100 stock pays $3 a year in dividends, its yield is 3%. A higher yield doesn't always mean a better investment. Some companies raise yields because their stock price drops, not because they're paying more. So yield is helpful, but context is everything. Healthy yields usually fall between 2% and 5%, a balance of income and stability. Your goal isn't to chase the highest yield, it's to find sustainable ones. Some companies don't just pay dividends, they raise them every year. These are called dividend growth companies. Imagine earning $100 in dividends your first year, then $103, then $110, then $125, all without adding a single extra dollar. That's dividend growth, income that increases automatically as companies expand. This is how investors create streams of income that keep rising even after they retire. Your dividends begin to outgrow your expenses. And that's when true financial freedom begins. So how do you start building a dividend portfolio? Here's my approach. Step 1, look for companies with long, consistent dividend histories. Step 2, choose businesses with stable earnings, not hype. Step 3, add dividend ETFs for diversification. Step 4, reinvest dividends automatically. Step 5, be patient. Dividend wealth grows slowly, then suddenly. Over time, your portfolio becomes more than numbers on a screen. It becomes a machine, quietly creating income while you sleep. Dividends are more than a payout. They're a philosophy, a way of investing rooted in patience, ownership, and long-term thinking. When you build a dividend portfolio, you're not just hoping stocks rise. You're collecting income that grows year after year. It's one of the most stable, reliable paths to financial independence. And the best part, you can start today with whatever amount you have, because dividend investing doesn't reward the biggest wallet, it rewards the longest mindset.